But before I talk about the earnings, Aishwarya, your sense on this move on IT that has built up? Very interesting, right? I mean, the large cap IT stocks have put on 10-12% in a matter of 3-4 trading sessions, and many of them are, smartly off their lows, the 52-week lows. Are you reading anything into this? Anything from a fundamental perspective?
Good morning. Good morning to all the viewers. We were in that camp that believed that valuations of IT was slightly played more on pessimism. This got exaggerated. And there was an opportunity which was there. Obviously, the business case was not that solid because the uncertainty about growth was definitely there. But valuation was something which has basically played out much more than what it was expected. And then we connected how the majority of this company delivered. Players like TechM or possibly TCS reported inline numbers, or I would say decent numbers compared to what were expectations. We saw companies like Infosys or even Wipro reported weak numbers. Cognizant came out with numbers yesterday. Cognizant was up almost 11%. So I believe this was kind of the whole play from AI led, moving toward that AI enabler and that money rotating from AI stocks to the software stocks, which is also playing out on India. And in India, this become easier because of the valuation gap. We were very positive on the whole thesis. We actually were overweight on this. We believe that there is another leg to it. There's more, I would say, momentum to pick up, though many of the stock has gone up 10-15% higher, but there is more, I would say, steam to this. So be watchful on IT going down.
Okay. All right. Got that. Among the major names yesterday, some of the large cap names, Chandan, which reported numbers, for instance, Asian Paints. In the last few days, we've seen quite a few counters come out, right? BEL, very negative reaction. So just from the Nifty earnings, where we've seen sharp reactions so far this week, Chandan, do you want to call out anything where the chart patterns are interesting, where maybe there is a trade, and specifically a view on Asian Paints, whether you think that this is a good time to be entering?
So if I look at the Asian Paint, however, we need to focus on the crude as well. But the good part is that some support-based buying is clearly visible in these consumption name, including FMCG counter. If I look at the Asian Paint, if a technical price pattern is considered, then the buying interest is clearly seen at lower levels. We have seen good recovery, and the volume is integrated lower levels. If I look at the rollover data, there is also in line, which indicate the positive bias could be there. In fact, it has been consolidating from last couple of weeks, but bullish bias or buy and decline cannot be ruled out now. So with support of 2690, I think it can head towards 2820 to 2850 marks. If you ask me other name in heavyweights, I'll focus on one stock from auto, that is TVS Motor. The counter has seen a major breakout on the daily, weekly and the monthly chart. Almost after the consolidation of 8-10 months, the stock is all set to head towards the new all-time high territory. So here I'm looking for next leg of rally with positional support of 3900. I believe it can head towards 4350 to 4500 marks. So S&P can be bought, buy and decline could continue. TVS Motor also can be seen with positional setup as well as the swing trade as well in here.
Okay. All right. So some auto names on Chandan's radars. Aishwarya, I'm taking up some of the staples with you. I mean, FMCG staples, traditional consumer companies. What did you think of, say, a Colgate Palmolive or even Asian Paints for that matter? Dabur, I'll get to the numbers in just a bit. But from the pack that has reported so far on the consumer front, even Eternal's done very well after the numbers, right? I mean, it crossed a 300 yesterday. Is there anything that you think can be bought afresh?
Right. So if you look at the FMCG pack, we saw very strong numbers from the likes of Nestle, Bajaj Consumer, and more or less inline number by HUL on volume growth. And then we saw what Colgate came out with almost 8-9% volume growth. Dabur came out with 5% volume growth, which I believe are pretty decent given the way inflationary pressure was there on account of crude volatility of the last quarter. So I believe FMCG has been, I would say, has done a decent performance. And we spoke about Eternal last time also that they have done very, I would say, decent numbers in the last 2-3 quarters, and this quarter was another continuation of that. So we remain very, very positive on the whole FMCG space because valuation is the key. But one point I want to bring to everybody's notice, to all the viewers, is that we are almost halfway through this quarterly results season, right? Quarter 1 FY27. And I'm very surprised and positively encouraged to see the momentum picking up across the sectors, right? We have almost 50% of the companies have reported numbers so far. And the growth, at least for the say Nifty 50, revenue growth is upward of 17-18% year on year. Even if we take on profit growth is close to 10%, which is higher than what the street was expecting when we started this quarter. On top of the expectations of very strong margin hit because of the crude. Now, if you go down, if you go to mid caps and small cap, you will be surprised to see that the revenue growth is much higher. Mid caps have grown at 23-24%. And small cap revenue growth year on year is upward of 30%. And then when we look at the EBITDA and PAT growth in mid cap, because of the OMC, there has been some impact. But if you look at small cap, the earning growth is upward of 50% so far. So the number of companies who have shown beat compared to misses is around 60-40. So that tells us that the earning momentum is very, very strong. And then we just connected with the FI's data in this last month that really make a very compelling case that India is getting back his money. And that's just not because of consumer stock. If you look at most of the domestic facing companies, whether it is BFSI, NBFC, consumption, discretionary, industrial, has done phenomenally well. Whereas the export oriented sectors, whether it is pharma, to an extent, IT, where we have seen some pressure. So I believe it's a very, very sweet spot. Market is what discounting this. FIs are looking at it. We see a very interesting time ahead.
Okay, all right. So we'll talk about some of those themes as we go forward as well. Quickly, let's run through today's stocks and news list. It's a really long list because so many mid-cap numbers have also come out. So I'll start first with the bigger names. Eicher Motors. Well, Eicher Motors seems to be revving up in top gear because it is a beat on the revenue front. It's a beat on the profitability front. Margins are more or less in line with estimates. Revenue up 31.5% at 6,632 crore rupees. The profit after tax is up 21.4%. The EBITDA is looking quite solid, 32.2% increase in EBITDA year on year. And like I said, the margin is more or less in line with estimates. It's come in at 24%, which is a shade better than where the margin was same period last year. The board has also approved, an amount of 1,225 crore rupees. This is a greenfield expansion in Andhra Pradesh. So that's Eicher Motors. Now let's talk about Dabur. We're just discussing FMCG stocks. Now results are more or less in line with estimates. Profit is up 15%. Revenue is up about 10.6%. EBITDA is up about 11%. The margin has also held steady. I mean, in fact, slightly better than last year, 19.7% versus 19.6%. So all of this is absolutely in line with estimates. The volume growth is 5%. But we need to, watch out for the commentary from Dabur, and I wonder how the market will take it, because Dabur says, of course, that rural markets continue to outperform urban markets, and that's a trend they've seen for the last many quarters, in fact, 8 quarters. They're targeting double-digit top-line growth in FY27, but they're saying much of this growth is going to be price-led, maybe not so much volume-led. The company says that volume growth is expected to remain under pressure because of higher inflation, but they're still hopeful of keeping margins on a higher trajectory with price hikes. So the growth from here on could be more price driven than volume driven. That's the word from Dabur. So we'll see. That's one. Let me quickly take up MTAR Tech as well. This is a blowout set of numbers that we've got from MTAR. Net profit of 50 crores versus just 11 crores same period last year. Revenue of 360 crores versus 157. So more than doubling of revenue. And EBITDA as well as just increased multi-fold, 85 crores versus 28 crores. So it seems to be a very strong execution quarter for MTAR with a couple of projects coming to fruition. Margins have also dramatically expanded, 23.5% versus 18.1%. That's one. Another good blockbuster set of numbers could be Moil. Profit up 70%, revenue up 6.6%. EBITDA is up 72%. So operationally, it's looking very strong, at least year on year. And even margins have surged for Moil. So keep that on the radar. Then there is Wari, again picking out something that at least optically was looking very good. I mean, if you look at the year-on-year performance, sequentially some people will argue whether it's really keeping up pace with markets' expectations. But for what it's worth, year-on-year profits up 14%, revenue up almost 79-80% year-on-year. EBITDA is up 44.4%, and the margin is at 18.2%. Though the performance seems blockbuster, but like I'm saying, the estimates were really elevated. So it's a shade below. So let's see how the market reacts to this. Finally, one not so great number, that could be Piramal Pharma. The company's reported a net loss, a loss of almost 70 crore rupees. This compares to a loss of 81.7 crore rupees last year. Revenues up 17.5%. EBITDA has surged quite a bit year on year, 80 to 83% jump in EBITDA, and margins are also looking better, at least year on year. So, well, these are just some numbers. It's a huge, long list. I could go on and on. But let's quickly get to our experts on some of the major names. Aishwarya, Eicher Motors, looking at the performance, buy, sell, avoid. What's the call?
No, so ISA motor, I believe, is going to be a play on the capacity addition. We saw the number; they were more or less in line. If you go ahead, I think the pressure is slightly coming from the export business. Looking at their both CV as well as the two-wheeler side, I believe the growth momentum is in mid-teens, which should continue at least 15% growth. There would be some margin pressure which will limit its growth on earning going ahead. So I believe at 28, 29 time P for 15 to 18% growth, I believe there are better opportunities in the auto space. They might be bringing out new product because their capacity is increasing from almost 1.59 million units to almost 2.5 million units for the next 2 years. So there will be new product. The acceptance of those new products will dictate how the stock price will move. But I believe this is one which is meeting the expectations, and until they do something where they can beat expectations, the probability of making money is slightly on the lower side. I would rather stay with two-wheelers players like TVS or possibly value pick like Tata Motors in the wheel space to make meaningful return over the next year or so.
Okay. Coming to you, Chandan, on Eicher, what's the call? TVS, you said you like. Anything else in the auto pack, and specifically on Eicher, how would it, if someone wants to take a two-wheeler exposure, TVS is one stock, would you recommend Eicher or Bajaj at all?
Yeah, so Surbhi, if I look at Eicher Motor first, the counter has seen a rally of around 10% in this month. Major trend is positive. However, on last day it remained consolidative, but has been making higher tops, higher bottom from last 10 days. Moved from 7152 all the way to 7900 marks. So major trend is positive, but already rallied well. So buy on decline is advised. So my suggestion is use any dip towards 7600 to 7700 to buy with support of 7450. Look for target towards 8000. And Bajaj Auto could be other name, which has recently seen a good momentum. However, rallied well, but major trend is turning upwards with buy on decline stance. Use the support near 11,000 for an upside move towards 11,700. So TVS Motor, Eicher and Bajaj Auto could be 2-3 preferred name in the auto pack at the current scenario.
And what about Dabur, Chandan? On the technicals, how is it looking?
Yeah, so if you look at FMCG, more positive on the Marico than Dabur, because Marico is one of the strongest counter given a major breakout, and Dabur is trying to bottoming out. However, if I look at the price behavior of last 4 months, it got stuck in a range. And however, this is going to be the 5th year when Dabur is underperforming year-on-year basis. So momentum is missing. Upside seems to be kept, but on daily chart, it has bottomed out with support near 420 and bounced towards 440, 445, but it may stuck near to those zone. So if looking for some recovery and bounce, then definitely can go with Dabur. But overall, in terms of relative strength in multiple time frame, Marico looks quite promising for next leg of rally towards 900 to 925.
Okay, so you would go with Marico. Got that. In terms of a whole host of the mid caps that have come, I read out a couple of those names. Worry, for instance, from the renewable space. Aishwarya, what's the sense? I mean, usually this is a space where people do want to invest. How do you look at Worry? If not Worry, any other names that you would advise on?
So we are very positive on the whole power as a space, but we have categorically avoided renewable segments, especially exposed to solar and wafer and modules players, because we believe there is so much of competition. There's growth, but the pricing power is definitely missing through. So if you really see, the majority of these companies has been growing 30, 40% year on year over the last 2, 3 quarters, but stock prices has hardly moved.